Hi, welcome back to Bargain Trader Channel. In today's video, we'll explore a powerful yet underrated technical indicator known as the Donchian Channel. Whether you're a beginner or a seasoned trader, this tool can revolutionize your approach to the markets by helping you identify trends, breakouts, and optimal entry and exit points. The Donchian Channel is a favorite among traders because it's versatile and works across all asset classes: stocks, Forex, crypto, and more. If you want to level up your trading game and learn how professionals use this tool to profit from market movements, stick around and watch this video till the end. Before we dive in, make sure to hit that like button, subscribe to the channel, and turn on notifications so you don't miss out on our future content. The Donchian Channel is a straightforward yet powerful technical analysis tool designed to highlight price extremes over a defined time frame. It helps traders visualize key levels of support, resistance, and potential breakout opportunities. This indicator plots three key lines on your chart. 1. Upper band marks the highest price reached during the look-back period. 2. Lower band tracks the lowest price within the same period. Middle line represents the average of the upper and lower bands, offering a central reference point. While it might resemble Bollinger Bands at first glance, the Donchian Channel stands apart by relying solely on price data. Unlike Bollinger Bands, which incorporate standard deviation to measure volatility, Donchian channels focus purely on historical highs and lows. This simplicity makes them a go-to tool for spotting potential breakouts and assessing market trends with clarity. Setting up the Donchian Channel. 1. Open your charting platform. Start by opening your preferred charting platform, such as TradingView. 2. Add the Donchian Channel. In the Indicators section, search for Donchian Channel and click to add it to your chart. 3. Adjust the settings. The default look-back period is usually 20, but you can change it based on your needs. Use a shorter period like 10 for quicker signals. Use a longer period like 50 to capture larger trends. 4. View the channel. Your chart will now show three lines: the upper, lower, and middle bands forming the Donchian Channel. With this setup, you're ready to start using the Donchian Channel to guide your trades. How does the Donchian Channel work? The Donchian Channel essentially defines the price range for the selected period. Here's what each line represents. Upper band. If the price reaches or breaks the upper band, it signals bullish momentum, often indicating a breakout. Lower band. If the price touches or breaches the lower band, it signals bearish momentum, suggesting potential downside movement. Middle line. The middle line acts as a reference point for the average price and can serve as a dynamic support or resistance level. This makes the Donchian Channel a powerful tool for both trend following and range-bound trading strategies. Key strategies for using the Donchian Channel in Forex. 1. Breakout trading strategy. Breakouts are a popular way to use the Donchian Channel in Forex trading. Here's how to apply this approach. Buy signal. Enter a long position when the price breaks above the upper band, indicating strong bullish momentum in the currency pair. Sell signal. Enter a short position when the price breaks below the lower band, signaling bearish momentum. Example, let's say you're trading a major currency pair, and the price closes above the upper band. This confirms a buy signal. Place your stop loss just below the middle line or a recent swing low, and set your profit target based on the next key resistance level. Breakouts often follow periods of low volatility or sideways price action. Look for consolidation before the breakout to improve your chances of success in Forex trading. 2. Trend following. The Donchian Channel is an excellent tool for identifying and riding trends. Here's how to make the most of it. Spotting an uptrend. An uptrend is confirmed when the price consistently stays above the middle line, the upper band is rising, and the market forms higher highs, new peaks, and higher lows, retracements that don't fall below the prior low. These higher highs and lows reflect increasing bullish momentum. Identifying a downtrend. A downtrend is evident when the price stays below the middle line, the lower band is falling, and the market forms lower lows, new troughs, and lower highs, retracements that don't surpass the prior high. This indicates sustained bearish pressure. Using the Donchian Channel as a trailing stop. During strong trends, in an uptrend, Use the lower band as a dynamic trailing stop to protect your gains. In a downtrend, the upper band serves as a trailing stop to lock in profits. By combining the Donchian channel with the concept of higher highs and higher lows, or lower highs and lower lows, you can gain greater confidence in your trend-following strategy and better time your entries and exits. 3. Reversal trading. In range-bound markets, the Donchian channel can be a powerful tool for spotting potential reversals. When the price touches the upper band in a sideways market, it often indicates overbought conditions and a possible downward reversal. Similarly, when it touches the lower band, it suggests oversold conditions and a potential upward reversal. Example: suppose you're analyzing a currency pair and the price touches the lower band of a 50-period Donchian channel. If this aligns with a key support level and is confirmed by bullish candlestick patterns, e.g. a hammer or engulfing pattern, it can signal a strong buying opportunity. 4. Combining with other indicators. To enhance the reliability of your trades, combine the Donchian channel with additional indicators. Moving averages. Confirm trends by checking if the price is trading above or below key moving averages like the 50 EMA. RSI, Relative Strength Index, spot overbought or oversold conditions to better time your entries. Risk management with the Donchian channel. No trading strategy is complete without solid risk management. Here are some essential tips. Always use a stop loss. Place your stop loss outside the Donchian channel's range for added protection. Position sizing. Adjust your position size according to your risk tolerance. Never risk more than 1 to 2% of your account on a single trade. Gauge volatility. Use the channel's width as a measure of market volatility. A wide channel signals higher volatility, so proceed with caution. Advanced tips for mastering the Donchian channel. Customize the look-back period. For scalping or intraday trading, shorten the look-back period. Use longer periods for swing or position trading. Spot false breakouts. Not every breakout leads to a sustained move. Look for volume confirmation or wait for a retest of the breakout level. Backtest your strategy. Refine your approach by testing the Donchian channel strategy on historical price data before trading live. Common mistakes to avoid. 1. Ignoring market context. The Donchian channel is most effective in trending or range-bound markets. Avoid using it during choppy, indecisive conditions. 2. Overtrading. Not every breakout or reversal is worth trading. Stay patient and focus on high-probability setups. 3. Neglecting risk management. Even a great strategy can fail without proper risk controls. Thanks for tuning in to this deep dive on Donchian channels. If you found value in this video, make sure to hit that like button to support the channel. And don't forget to subscribe and turn on the notification bell so you don't miss more strategies to level up your trading game.